I.O.T. Powering the Digital Economy. Brought to you by Schneider Electric.
FinTech, that's fancy shorthand for the financial technology that's driving efficiency and enabling innovation. It's the technology that shakes things up and disrupts the status quo. Now, we consumers have so many different ways to pay for things, using apps on our smartphones or with near-field technology, even the device itself. The responsibility for making all transactions go through smoothly lies with the businesses who control the flow of online money. So in this programme, we're focusing on how the big players in the world of finance, the banks who look after our cash, are adapting to the digital revolution.
And we'll be meeting one finance company born in the digital age. What risks are they prepared to take to keep the consumer on side with only the World Wide Web as their shop front? I'll also be talking to banking regulators about what they need to do to keep the big boys in check and find out what the future holds in the way we all pay for things. New technology has changed the face of high street banking worldwide. That's meant an investment in new technology and the loss of traditional banking jobs.
HSBC has closed over 300 branches in the UK in the past 5 years, but they've invested heavily in fintech. Their technology hub is here at the Bluefin building in London.
Josh Bottomley is the Global Head of Digital, Retail Banking and Wealth Management at HSBC.
This is HSBC Beta that's in staff pilot, about to go out to 10,000 customers.
Before that, he was Global Head of Display for Google in California, having previously worked for Goldman Sachs and McKinsey and as Managing Director for the Financial Times Group.
Well, you came from Google to HSBC, an old established bank that's been around since 1865. Do you think you brought with you some of that tech new age spirit?
I hope so. I mean, we've certainly got, for example, about 1,000 jobs now in HSBC of jobs that didn't even exist. The title didn't exist here. So, for example, we've got solution architects who weren't there in the technology organisation. We've got optimization experts at the front end. But certainly, I hope I brought some of that mindset and way of working to HSBC.
I think you were saying it was called the startup mentality. How important do you think that kind of outlook is in banking these days?
The interesting thing for digital is there were lots of problems that we would need to encounter. We've been trying to get technology to the cloud. We've been trying to change the customer experience. And that's required changing HSBC's processes. I think of digital in HSBC in three very broad buckets. There's clearly a really important customer bucket, which is understanding what customers want and how we can safely deliver that to them, whether it's about making a payment, taking out a loan or a mortgage. There is secondly an issue around how we build the technology and how we operate those services, because there are some very big shifts that we and other large organisations are doing, but they actually are quite significant in how we deliver the services. And the third, and I think actually at least as important, is how we work, the culture, the organisation around doing that. I think some people in big companies get a little confused about digital, and HSBC, we're very clear this is about changing how we work, how we operate, and putting some real meat into that cliche of putting the customer more at the centre.
So let's talk a little bit about how you put the customer at the centre. Talk me through some of the new technology that you've developed to make that customer journey smoother.
So a really simple example, normally when you spend money on your credit card, it gets to the end of the month before you know how much you've spent and whether you then choose to pay some of that off or whether you choose to continue paying interest on that loan. Well, what if we could give people some of that information at the point where you're making a big transaction? And so we've ended up, again, changing policies, changing some of the big technology systems, and getting some of the rules changed. Now, the really good ending to the story is we've just launched a service called HSBC Beta, which has now taken that even further on, and we're making a much more visualized experience. So it's on your mobile phone, and you can start to see your spending in categories and on pie charts. So it's again, the point is, it was starting with the customer, but we've had to change a whole bunch of other ways of working and processes and systems in order to deliver that.
It's interesting to hear about the startup mentality at HSBC, a bank that's been around some 150 years. The customer's at the heart of its new services and features, but the business itself is evolving with new processes and new kinds of jobs. The culture at big banks is changing.
And they've had to change due to the impact new innovation companies are having on the finance industry. One of these new disruptor companies is Transferwise. Their headquarters is in London, a short walk from the financial district. They offer borderless banking, a single account for both consumers and businesses, which can hold several different currencies at once. Harsh Sinha is Vice President of Engineering at Transferwise. He's got form with online currency transactions. He's the former director of product at PayPal, leading their product strategy and the development of PayPal's mobile apps.
So this is a Transferwise app on an Android tablet. Let's say I want to send myself some money. I'm going to send some pounds to euros.
So Transferwise is an international money transfer platform. It's an online platform, and it allows you to move money across borders at the exchange rate that you would see on Google, and very quickly and very conveniently.
Select the destination account, which is my Euro account, which is my borderless account on Transferwise, my wallet. And
so we actually are not registered as a bank. We don't have a banking license. We are registered with the FCA, and we have an e-money license, which allows us to open a borderless account like the way we have now. We just recently launched borderless, which allows us to hold funds, customer funds. We have safeguarding requirements the same way. We have to keep our customers' money separate than our company's money. But the way we are regulated with the FCA is that it allows us to move money across borders and hold these funds without being a bank.
So does it or doesn't it make you a challenger?
We are a challenger for sure. We're challenging the way finance is done in the world. We're not a bank, basically.
So tell me a little bit about the consumer side of the business. How big is it? Where do you see it going?
So right now we're moving overall about £1 billion a month. That compared to the banks, if you look at how much banks charge when you convert money across borders, they charge about around 5 to 8%. We charge about 0.5% in the entire transaction. So we're saving our customers about £1.5 million a day. So it's like £45 million a month. We've been at it for about 6 years. And we are moving, if you look at the total money in the consumer business across leaving the UK, we're about 10% of the market share.
It's clear that you have the consumer in mind. What's in it for everyone else? What's in it for the challenger bank? What's in it for the banks when you're giving them all of the services?
And again, it goes back to what is the problem you're solving, right? So there is a business around this. There is, when we do a transaction for a consumer, there is a fee that we take. And we do believe that it should be way easier to move money around the world than it is today. If you think about how money moves, really it should be as simple as sending a text message or sending an email. In the end, physical cash is not changing hands. It is bits and bytes moving across computer systems connected through a network, and that's how ledger entries are made. So when you send me money, it's not that if you send me money from Lloyd's into my HSBC account, somebody's walking out of the branch and bringing it to HSBC. So why is it that it is so expensive to move money around the world? So we do believe with the newer systems, the newer technologies that we are using, we can deliver these services at a much lower cost. And once we can do that, we can turn around and make it much cheaper for the customers. It's both win-win for both companies, and we still can keep good margins to run a good business, employ people, and create more jobs in the economy that we work in.
Now a lot of people can do their banking on their mobile phone. Is this a direction that Transferwise is looking to move into?
I mean, we already see about 50% of our new users come, the first time they interact with Transferwise, they do that on mobile. It makes sense. If you think about it, the smartphone has become the extension of the human body. And it's actually, when you're doing financial transactions or when you're doing something where you're moving money around the world, you want it to be in a private space. So it's better when it's in your hand in a smaller form factor and it's closer to you and in your pocket. And we definitely see that more and more consumers are asking us and other businesses to be mobile first. So we will see this trend to continue.
Smartphones like these are the driving force behind the dramatic technical changes happening now in the finance sector. Buying and selling, moving money and paying for things has never been easier. It's almost instantaneous. But what do the regulators, the people who police the finance industry, think of all this new tech? After the break, I'll be finding out how the Internet of Things is regulated in the world of finance.
This is London, the European capital of finance, and in 2017 it's still the world's major financial centre.
We trust the banks and the new digital technology to look after our money online. So how do traditional businesses and those working in cyberspace stay on the right side of the regulators whilst at the same time protecting our money?
London's Canary Wharf is where the European Banking Authority is based. They oversee all banking regulation for the 28 countries of the European Union. Dirk Haubrich is Head of Consumer Protection, Financial Innovation and Payments at the EBA. Their latest initiative is the new Payment Services Directive, or PSD2.
The PSD2 is quite a unique directive in the sense that it has the explicit objective to bring about competition in the market for payment services and to facilitate innovation in the market for payment services across the 28 member states of the EU. There are a couple of other objectives that the PSD2 has, like increasing security for payments, making payments convenient for consumers, and a couple of others. And sometimes these objectives are contradictory. And this will be quite a paradigm shift.
PSD2 is a game changer. It removes the bank's monopoly on user data. It would also allow businesses to access your account information held by your bank, allowing bills to be paid without going through a third party, such as PayPal or even a credit card company.
So PSD2 is actually a pretty great regulation coming in. I think it's going to help the consumers a lot. It's also going to help businesses that are consumer focused a lot. It's actually a next iteration on top of the first Payment Services Directive, which allowed non-banks to innovate and create regulated financial services. So now with PSD2 coming in, the benefits we will see is customers will be able to do online transactions in a more secure, convenient, and fast manner. And it allows businesses like us and others to be able to hook in to allow these build experiences which allow customers to pay through their bank account and not have to be completely dependent on cards, for example.
I'm actually quite excited about PSD2, and I'm not sure that's a very it's a very common view amongst other areas.
From January 2018, there will be new providers that will be entering the market, so-called account information service providers and payment initiation service providers that are able to access the payment accounts held with a bank in order to either initiate payments or to retrieve account information and make them available, for example, on your app. You have a mobile app where you can see all of the account balances of all of your accounts, irrespective of where they're held with whatever bank you have these accounts with, and you have an overview of your finances.
It's almost like you're saying the future is going to be having your personal finance advisor in your pocket the whole time on your mobile phone.
I hope so. I mean, that's exactly what it should feel like, and you're getting suggestions. So my personal favourite of this was that first time I used TripAdvisor, a long time ago now, and I thought, this is actually better than talking to my friend about the travel, because I can see the pictures of where I'm going, all the alternative places to stay, you get the comments, the good, the bad. It's a completely sort of, it's an experience that you like. And people don't think currently of their money like that. Most people don't. Most people avoid it, they don't want to deal with it. We all have obvious things we could do differently. And I would love that we've created an experience that's engaging in that sense that a TripAdvisor is, and you're helping you make decisions, and you're taking some of the fear as well out of the big aspects of that. PSD2 makes it much easier to share data from for one customer from one provider to another, and potentially with third parties. It changes the obligation on us as to how we provide services to customers. So for example, if I'm talking to you about your savings, if I have the data from your other accounts, I ought to be able to make better suggestions to you about what you can do than if I only see the data on your HSBC information.
But the big question is, who makes sure that our financial data is safe?
In terms of the security that's going to be needed to back up that technology, do you have a role in that?
We don't have a role in respect of the technological aspects of these technologies. That is not for a financial service regulator to take a view on. What we do have a role in is the security-related aspects, and in the context of the revised Payment Service Directive, the PSD2, we had to develop security requirements for the authentication of users when you use your bank account, when you use payment service electronically, remotely, how you authenticate yourself. And one of the key objectives that we have when developing such requirements is to write them in a way that they facilitate innovation and are also business model neutral. So we have an interest in not writing requirements that favor one particular technology over another or favor one business model over another.
European regulations don't extend to countries outside of the EU. The challenge for business is to navigate the complex web of world regulation.
Have there been any additional measures that you've had to satisfy?
I mean, in general, we obviously have to meet their global standards, whether it's around anti-money laundering laws, know your customer processes, also audits to make sure we are having data security and overall safeguarding limits around how we're using customer money versus our own money. Those things have to be taken into consideration. Part of them comes from regulation, part of that is just doing good business.
The online banking industry is confident that the technology it's implementing offers a good experience to the consumer and safeguards consumer rights.
But all this new fintech needs to operate across multiple platforms globally. Money attracts criminals, and cyberspace is a bit like a digital Wild West, with have-a-go hackers relentlessly trying to access our accounts. After the break, I'll be finding out what new technologies our business leaders plan to roll out to stay ahead of the criminals, and what those new technologies mean for society as a whole.
Investment in new technology is what powers the digital economy. In the first 5 years of this decade, the use of banking apps on mobile phones trebled.
In 2015, 43% of mobile phone owners did their banking using a smartphone. This digital innovation is streamlining the way businesses deal with their consumer clients. But what are the implications of this new technology for society as a whole?
Some of the biggest concerns for consumers is the safety of their money and their personal financial data.
We really take our customers' data security very seriously. And if you can imagine, for a financial business, it is built on trust. If we don't have a customer's trust, then we cannot be surviving as a business.
Let's talk about those ever increasingly high customer expectations. Do you think that's driven the change, or has the technology driven the change?
So I think it goes hand in hand. Sometimes customers expect more than what we have in the market today. And a lot of times technology pushes the envelope. So I'll give you an example of what happened with WhatsApp. Before WhatsApp came around, international texting was really expensive. And there was a big group of customers whose cell phone bills were really high because they were texting their friends and family abroad. WhatsApp came around, enabled by the internet, and completely killed that business. So that was technology innovation driving change to meet customer demands. Steve Jobs famously used to say that the customer really doesn't know what they want, so you need to build something and then the customer will like it. I think in a lot of places that's true, and in some places, of course, customers are asking for the innovation and companies are delivering it. And you are seeing the same thing happen with Transferwise, where we are now being able to hook into the local banking system in all these different countries and cut out the need to move money across borders, which then allows us to provide these services at a way, way cheaper rate.
The Transferwise philosophy is to drive down the cost of money transfers for consumers. For Josh Bottomley and HSBC's FinTech, the solutions are more fluid.
So let's talk about the future and technologies you think are going to trailblaze. Will these video information links and all of that, is it going to be real people? Is it going to be bots?
That's a good question. It'll be both. But I think where that's going to end is that you will have some basic services being used by bots, but it will very naturally, and we'll use a lot of artificial intelligence, migrate into real people where that's needed. So the combination of the mobile front-end technologies, the bots and the services there, and then the big data and the algorithm at the back end, I'm actually a big optimist. I think it's going to create a much better experience for our customers, and actually a better jobs, much more interesting jobs for HSBC's people as well.
So what do you think the biggest change will be in the future in terms of HSBC's relationship with the consumer?
The biggest change will be twofold. One is most of our interactions are customers not being able to do easily what they can do. And I really do think we are going to get rid of passwords because we're going to use biometrics, so accessing the services is going to be better. What I would love for customers to say is not that I use HSBC simply because I can do what I want or I get a mortgage rate. I would love people to say, I use HSBC because I think I manage my money better because of the tips, the prompts, the services. To do that, yes, requires technology, it requires a new way of working inside the organisation, and it actually requires a new relationship with the customer. The other aspect of this that we have to get through is getting customers to trust these services. We did a big research report this year which said that 87% of people feel as importantly about protecting their data as they do about protecting their money. So we've got also to go on a journey with customers in terms of maintaining that traditional trust we've had, but applying it in different ways to make this work.
So what's next for B2C innovation, do you think?
I think the biggest area we're working on now is still to get these mobile services out. And we've got a bunch of initiatives. So in Hong Kong, we've just launched a really interesting stock trading app. We're launching HSBC Beta right now, initially in the UK, which is about taking more of your information from different banks and trying to give you very practical suggestions and way of seeing that. And then the other big area is around getting rid of lots of these passwords by using biometrics. So I think right now the big focus is on creating a mobile experience for our customers, and they go, that's really wow. Do you know it's HSBC that did that? You never would have thought it would be a big bank that would sort that problem out.
Digital innovation is moving so fast, even the disruptors to the finance sector can't afford to be complacent.
How have you seen your role changing because of the fast pace of technology?
Yeah, so technology is changing a lot. I mean, if you think about even how mobile phones have changed in the last 10 years, it's a massive leap on what you can do today with the device in your pocket than you could do 10 years ago. So things like biometrics, things like how do we use photographs. So for example, sometimes we will ask you to take your ID to verify for our know your customer processes, send us your ID to tell us who you are. Sometimes we'll ask you to take a selfie with the ID in front of your face. That's a very quick way to know that if you have a fake ID, it's hard to get a fake face.
This is transformative technology, but particularly so in emerging markets, where it might change where people live, because they want to be somewhere where they've got Wi-Fi so that they can tap into these kind of services. What sort of developments have you seen there?
So I do think the penetration of the internet is absolutely required to get this kind of technology all over the world. I eventually do believe that the internet should become basic human right. It should be just like having clothing, food in your life. You should also have connectivity to information and to the systems and the internet. So either it'll become a utility first in most countries, and then after that it'll probably just be seen as a human right that you should have. If you don't have internet connectivity, you cannot access this technology. You really are at a disadvantage around finding your next job, finding your next house. Having that economic prosperity might not exist if you don't have access to the internet.
The big banking institutions can't offer the internet as a human right. Well, not yet. But they and the technology companies that are creating the gadgets we use to access it are pushing their businesses forward and driving growth in the wider economy.
Digital innovation makes life easier, and time is money. There's so much I can do on my smartphone, from booking a train ticket to ordering a supermarket delivery with one click. And that insatiable appetite for the newer, the faster, the safer. Consumers are driving it. Business is profiting from it. But to make it a success, the financial organisations offering it need to protect it. They say they can. Let's hope they're right.
I.O.T. Powering the Digital Economy. Brought to you by Schneider Electric.